The ideal time to start investing in dividend stocks was yesterday. However, if you haven't taken that step yet, it's not too late. Consider starting today. And to help guide you through the wonderful world of dividend stocks, I've compiled a list of 5 solid stocks that I chose to diversify my own portfolio. Before we dive in, make sure to hit that subscribe button and ring that bell to be notified when we post more valuable investment insights like this in the future. Let's start by laying some groundwork. To choose the best dividend stocks for 2024, we focused on key criteria. Dividend yield, which assesses how much companies pay in dividends. Dividend growth history, highlighting firms that consistently increase their dividends. Payout ratio, indicating earnings paid as dividends to evaluate sustainability. Overall financial health, measuring metrics like earnings per share or EPS growth and free cash flow. And lastly, industry position, favoring established companies with strong market presence. These are the guiding factors in identifying a diverse and dependable dividend stock portfolio for reliable income and long-term success. With that foundation in place, let's take a look at our number 5 pick, Johnson & Johnson, a powerhouse in the healthcare industry with a remarkable history of dividend growth. Known for its diverse product offerings across pharmaceutical, medical devices, and consumer health, Johnson & Johnson has consistently returned value to its shareholders for over 50 years, making it a cornerstone in the dividend investing market. With a 5-year average dividend yield of about 2.7%, investors can count on a solid income stream bolstered by the company's robust financial health. The firm maintains a payout ratio of around 50%, striking a strategic balance between rewarding shareholders and reinvesting in stock growth initiatives. Johnson & Johnson's impressive earnings growth, coupled with a strong free cash flow generation, positions it well to navigate market fluctuations, ensuring sustained payouts and long-term investor confidence. As we shift from healthcare to the energy sector, it's important to recognize that not all dividend stocks are equal. Our pick at number 4 is ExxonMobil, a leader in the oil and gas industry known for strong shareholder returns. ExxonMobil has raised its dividend for over 35 consecutive years, with a 5-year dividend yield average of 5.11%, offers a competitive return. The company has a payout ratio of about 40 to 50%, allowing a significant reinvestment while providing steady returns. Financially, ExxonMobil shows strength with healthy cash flows and solid returns on equity, positioning it well for energy sector volatility. While its dividend yield is modest, the company consistently increases its payouts, making it an attractive option for long-term investors seeking stable income. In our review of dividend stocks picks, we want to highlight our next option, number 3, AT&T, a leading telecommunications company popular with dividend investors. AT&T has been on my radar for a long time, and it has a strong history of dividend growth, and it's been a dividend aristocrat for years. Despite challenges in the media and telecom sectors, it has adjusted its payout strategy, with an astonishing 5-year average dividend yield of 7.11%. AT&T is appealing for income-focused investors. The company typically maintains a payout ratio of about 50 to 60%, balancing shareholder returns with investments in key innovations and infrastructure. Financially, AT&T presents a mixed picture. It faces competition and a significant debt load, but its strong cash flow supports its ongoing dividends. The yield often hovers around 6% or higher, attracting income investors. Overall, despite its challenges, AT&T remains a key player for those seeking reliable dividends. As we shift our focus from telecommunications to healthcare, let's explore number 2, Pfizer, a pharmaceutical giant known for its innovation and dividend growth. Pfizer has consistently shown its commitment to returning value to shareholders through regular dividend increases, supported by strong product pipeline and strategic acquisitions. With a payout ratio typically around 40 to 50%, Pfizer strikes a balance between funding research and rewarding investors. Financially, Pfizer is robust. This solid foundation allows Pfizer to offer attractive dividend yields with a 5-year average dividend yield of 4.14%, which is very appealing to income-focused investors. Positioned as a leader in the pharmaceutical industry, Pfizer is well placed to capitalize on ongoing healthcare demands and advancements, making it a strong choice for reliable dividends. As we highlight our top pick, number 1, Realty Income Corporation, it's important to note that this company excels in income generation investment. Known as the monthly dividend company, Realty Income has built a strong reputation for its consistent dividend growth, boasting over 50 years of consecutive increases. With a payout ratio of 80%, the company balances returning profits with reinvesting in its extensive portfolio of commercial real estate. Financially, Realty Income is solid, supporting a diverse portfolio of over 7,000 properties across sectors like convenience stores, drugstores, and dollar stores. This diversification enhances revenue stability and positions the company well to meet ongoing commercial space demand. With a 5-year average dividend yield of 4.64%, Realty Income attracts income-focused investors seeking reliable returns, enforcing its status as a leader in the REIT industry. And there you have it, folks. These are my top 5 picks of dividend stocks to keep an eye on in 2024. I hope you enjoyed this video. Thanks for watching, and we'll see you next time.